Hello, this is the Global Stock Portfolio team, and we are back with the portfolio results for 2017. The contents of this presentation. After a short overview of what we do here at Global Stock Portfolios, we will give you the tracked returns of the portfolio selections for 2017 for the 13 portfolios we have been selecting at the beginning of 2017. And we will compare the results versus targets. So, what do we do here at Global Stock Portfolios? Well, in 13 major global stock markets, we select 13 portfolios of high-quality listed public companies that are priced for attractive medium-term returns. We exclude large companies and focus on low PE. We are process-driven investors. Data are collected from public sources and portfolios are made on an annual basis at the beginning of each year. And we buy these stocks on the first trading session of the year and keep them for a year. So in the graph we have a comparison of the portfolio performance for France in 2016 versus the reference index, the CAC 40. So the portfolio compositions for 2017 were presented earlier for the 13 portfolios we're tracking at Global Stock Portfolios. So we can give you the results of each portfolio in two different ways. A graphic comparison of the portfolio performance versus the reference index, like in this slide where we tracked the French portfolio versus the reference index, and we can see that the portfolio beat the index with a very large margin. And we can also give you an Excel spreadsheet that gives individual returns for each stock that compose the portfolio selection, and also the return for the reference index. But we can see here that the average portfolio return was 32.82% in 2017, while the CAC 40 return was only 8.32%. Now for Germany, if we give you this graphic comparison of the portfolio selection and the reference index, we can see that although the portfolio beat the reference index in 2017, it was with a much smaller margin than for France. And if we go down to the figures, well, also in this table we also give you each individual return for each stock that composed the portfolio in 2017. We can see that the average portfolio return was 18.36% versus 11.37% for the DAX reference index. Now in the next slides we will give you the results for three other portfolios. While only the graphic results, we have the table results with actual figures, but it will be too long. It would be too long to go through all these results. So here for the UK, we have a magnificent portfolio performance of 36% versus close to 5% for the reference index, the FTSE 100. And then in the next page we have one of the best performance for the year, the Italian portfolio that went up 33% versus a reference index that went up only 11%. And to finish this series, we have another portfolio, the portfolio covering Netherlands and Belgium together, and this one went up only by 4% last year, and in fact it didn't do as well as the reference portfolio, the reference index. We have two reference index for these markets, the BEL 20 for Belgium that went up close to 8%, and the AEX for Amsterdam for the Netherlands, and that went up close to 11%. So this is the case in where we had a performance that was not as good as the reference index, it was worse. Or hopefully it doesn't happen too often. Now for Switzerland in 2017, we're also in the case that our portfolio selection beat the reference index, the portfolio went up by 20%, while the reference index went up by 11%. So if we do want to go through each individual portfolio selection, then we have to give you this big table of all the results for the 13 portfolios last year. What happened is, if we look at these portfolios, how they behave versus their reference index, which is also given here in the second column, and the index return is given in the third column, while the portfolio return is given in the fourth column. And we calculated the relative return, so the portfolio return divided by the index return, and it gives you here the actual results of our effort to beat the index. We were quite successful in 2017 because with one exception, our portfolio selections beat the reference index with a very significant margin. The average margin is 18.22%. And the last column is the portfolio returns in euros. You have to remember that the portfolio returns are given in the local currencies, while here, because we're based in France, we want to give you a portfolio returns in euros. So, how did we do in 2017? How were the results versus targets? Well, we had two targets. We wanted to beat the market 80% of the time, and we've met this target very easily. In fact, we beat the market almost 90% of the time in 2017. And the second target was to referring to our portfolio selections, and we had to beat the reference index by 5 to 10% on average on an annual basis. And we actually we did beat the reference index by 18.22% on average in 2017. This was a very good result. We don't expect such a good result every year, but it was a significant result, and definitely we want to underline that it was a very good result in 2017. So this was our presentation of the results for 2017. Thank you for your attention.